That's it for multiple time frame analysis. Pretty cool, huh? This is an amazing tool that can help you with your trading strategy, and I definitely recommend that you implement this. So let's review a little bit from this module. First of all, you have to decide what the correct time frame is for you. You'll only figure this out by demo trading on different time frames. Once you've found your preferred time frame, use multiple time frame analysis by first going up to the next higher time frame to get a bird's eye view. Then make a strategic decision to go long or short based on the direction of the trend. Then return to your preferred time frame or lower time frame to make tactical decisions about where to enter and exit. I would definitely make it a habit to look at multiple time frames when trading. Choose a set of time frames that you're going to watch and only concentrate on those time frames so you can learn all about how the market works during those time frames. Stick to 2 or 3 time frames. Any more than that is just not necessary. Using multiple time frames resolves contradictions between indicators and time frames and is so key to trading successfully. Remember to get the bird's eye view. We cannot stress that enough. I'll see you in the next module.
Hey, thanks so much for watching. Make sure you join our free Discord channel to get access to all the cheat sheets and a bunch of other cool bonuses. The next video in the course is right here.